Hello, Phanos. Welcome to the Close Call Show. I'm super happy to have you here on the show. This episode, I think, is going to be super different and special because we have a really, really cool topic that we've planned to discuss. I'll hand the mic to you. Let's sort of kick this off. Start with a bit of an introduction about your journey. How did you start? How did you get into entrepreneurship? And what are you doing at the moment?
Cool, yeah. Thanks for inviting me, Jay, and nice to be here. So my name is Phanos. I'm one of the founders of this company called 2050 Materials. The way I got started is I'm an engineer by background, and I was out of university. I joined a very early stage startup as the first employee, and that startup did quite well. So it kind of grew to 30, 40 people, and then got acquired by a kind of publicly listed US based company. And I guess that's when my entrepreneurship bug sort of started, not so much because of the exit, but more because of, constant change of environment and sort of very dynamic type of work. So I'm someone who gets bored relatively easily. So that kind of suited what I like to do. Yes, more specifically, I was working in climate change risk assessment in the startup, and then eventually got the acquirer was this company that sells data to the financial industry. And I'm very, very interested in using data in a way that helps people achieve different things. There's a sort of very nerdy aspect to that I really like, but there's also a very real connection to the world. And I sort of dove into the built environment because I saw some big issues with supply chain emissions and supply chain impacts, which is what we're doing at 2050 Materials, basically.
So I really like the point about using data because data is rampant and is available everywhere, but how do we use it? How do we make use of it? How do we leverage that? So tell us a bit more about 2050 Materials. I know you've sort of touched on the built world, the data problem, but what does it do? And if anyone who's listening wants to get in touch with you, how can they do that?
So maybe a bit of background for anyone who is not necessarily from the sector, which is very relevant here. When I say the sector, I mean like buildings and things that are being built. So it's basically like everything we've done as humans, really, whether it's cities or roads or buildings. It's a big part of humanity and societies. The interesting thing about this industry is that anything we build, for the most part, is basically created from scratch. Even though this sounds completely insane, every time there's a new building, there's new drawings by architects, there's new kind of research for the materials that will be used. There's the only thing that is repeatable is basically the knowledge that sits inside people's heads. And up to now, it's worked well, right? Like we've built a bunch of cities and it seems to be working relatively well. But the industry is also under a huge amount of pressure now because it's a huge contributor to climate change. So they need to suddenly build faster because the population is still growing, but at the same time also build a lot more greener and like create a lot less emissions in the process. And it turns out if you do things manually and from the beginning every time, it's really hard to optimize things. So a revolution that's happening in the sector is that suddenly people are starting to think in more data-driven approaches. So they're starting to use data for decision making in order to build more efficiently, build more sustainably. And in any space that's using a lot of data, for example, a similar sector that uses a lot of data is the financial industry, you need kind of data platforms and data providers. So in the financial industry, if the Bloomberg data terminal didn't exist, then investors wouldn't really be able to do their strategies. And in a similar way, basically what we're building at 2050 Materials is the one kind of data platform for the industry to build more efficiently, more sustainably. And it's a really cool project and venture, I would say, because we get to work kind of across the industry and hopefully have a positive impact by helping people have the right kind of data to build better.
Wow. From our discussion, I know you've had a little bit of grant funding. So the first question would be, how did you decide on grant funding? And how should one go about acquiring grant funding? Because from my experience speaking to founders, every single time there is a grant and they want to access it, there's just so much headache, so much admin. No one knows how to fill it. It's almost like a 6-month project, full time on it. So there's so much chaos and so much uncertainty and fear around that. So the first thing is, how do you choose grant? And then how should one go about it?
Sure, yeah. I'm not sure I can be like the absolute advocate of grants as the way to to finance your company, but it sort of somehow happened for us, and I've learned a lot from it. For us, what happened was we basically put some money out from some of our own money in the beginning and started building. We had some friends and family that kind of put a few tickets just to get going in the beginning. And then at the stage where it was clear what we wanted to build, we knew what we needed to spend resources on, we knew we had needs for higher amounts of capital. We actually looked at both routes, both venture funding and the possibility of grants. And in a sort of opportunistic fashion, we kind of started both processes in a very light touch way. So we spoke to a few VCs to see how and if they were interested. And then at the same time, we met some really interesting consultants that specialize basically on EU funding. And while having a beer with them, they basically told us, we think the project and the company you're building ticks all of the boxes for this new scheme that's coming out. So we said, cool, let's do it. You guys help us apply. In the meantime, we'll look for funding in other places and let's see what happens. Now, what happened is basically both opportunities kind of landed, funnily enough. And it was a very easy decision simply because the amounts were the exact same. And one was equity free and the other one wasn't. So we said like, oh, this makes no sense. Let's just take the grant. There's more to it than that. It turns out, like, not that I regret it or anything, but grants come with a bunch of other work that's maybe not equity, but it's still work. So maybe just to get back to your question of how we went about it, for us, we were lucky. So there's these consultants that basically told us about the specific funding that they had experience in applying for. And they told us, we think your project really works well. And we were also lucky in the fact that these specific consultants were really, really good. So we basically just threw a bunch of things at them, like our business plan at the time and our, product screens and our plans. And we had a few different calls. And then they put a really nice looking report together, which we then submitted. And then that got us, let's say, to 90% of the process. So definitely one of my learnings is don't attempt to do it yourself, because there's specific particularities that you need to know about when you're applying for grant funding. And the people who specialize in that really know the details. And also, you probably don't have the time to do it as a founder, or maybe shouldn't spend all of that time doing it. Yeah, that's kind of like an initial summary, I guess.
Wow, that's great. So I would love to sort of get into what are these other things. Let's sort of call them cons. And the other question is, you used a consultant or a consulting firm. Do they charge you for something? Do they take a fee? If they do, is it worth it?
Let me start with the second one. So it depends a little bit on the consultants. There's two models that I've heard of. One is they just take a success fee. So basically they do the application, and then if you win the amount, then they get a certain percentage. So in the cases where they just take a success fee, the success fee can be quite high. So I've heard something around, I think like up to 10% it can go. But then at the same time, you are a startup that has you spend nothing basically until you get that money. So it kind of makes sense if you get someone who's good that accepts that. In our case, it was a combination of an upfront fee and then a smaller success fee. And this is something we negotiated. I think that depending again on the consultant, the upfront fee, shows some more commitment, and then they feel a bit of responsibility to really do it well, rather than doing this kind of shotgun approach where maybe they do 20 fundings and then they just hope that one of them lands, and maybe that's not yours. So that's kind of the model. And I would say it is worth it. Like, again, at least at the stage that we were at, where we had no time to do it ourselves and probably would not have done very well to do it ourselves, the amount of money that we ended up paying to the consultants is more than worth it for what we were able to build with them. And then on the kind of cons side, there's kind of two major things I can think about, which is very important to at least consider before you go for funding or for grant funding, or at least to have in mind while you're doing the application. So the first thing is, when you apply for a grant, you are essentially putting together a report that says what you're going to do with that money for the next, let's say, 1 year or 2 years. which is not unsimilar to what you do when you sit down with your lead investor, for example, if you've raised the venture fund round. However, there's a lot less flexibility in the grant to change that plan. So there's tweaks you can do along the way, which, you can justify and still get the money for at the end. But if you have to completely pivot, let's say, as a business, so if you figure out that, my model really doesn't work, but I've found something that might work that has nothing to do with the initial application, I think that would be much more challenging to do with the grant. So I'm not sure there is a way around this completely, but I would say try to set goals and targets which are not extremely specific and somewhat open-ended so that you have the flexibility of then doing certain changes and justifying them within the context of that report. So there's a bit of that game to be learned and to be played. Now, the second thing is more to do with the time spent after you've had the grant. So in our case, the grant was basically paid out it was a project of 2 years, and a certain amount is paid upfront, a certain amount is paid at the end of the first year, and then a last amount is paid at the end of the project, which for us was 2 years. The upfront fee, okay, you get it once you have the grant sort of approved and given to you, but then the 1 year mark and the 2 year mark has a lot of reports that need to be put together. And those reports basically are what the grant organization sees and assesses with regards to whether or not you've done the work. So they're not going to go, do the work and look at your product online and look at your LinkedIn or look at the customers you work with, which would be an easier way to assess your results. So you really need to kind of outline things. So that just takes a lot of time, I would say, to do it well. So you have to plan for that aspect. So that's kind of the process. And then one mistake that we did that in hindsight would have been much better to think about differently is we could have started working on the reports on an ongoing basis, theoretically, because we knew what reports we had to submit. So you could, for example, one of the employees or one of your colleagues, to have the responsibility of just filling in a paragraph every month, and then probably you would have a really good report at the end of the period. We unfortunately didn't do it because, you have a million other things to worry about usually. So we let it drop off.
So grant funding does come with a lot of admin, if I can sort of use that word, which sort of eats into your vision, how you execute things, how do you plan for your future. I'm also thinking about our hiring. Where do you focus your resources because you've already committed on something? Very interesting. And thank you so much for sharing all these very, very unique insights, because I don't think a lot of people understand, what comes, the strings that are attached with grant funding while it's non-dilutive. What I want to know is, so how should one think about grant capital as an additional step up through maybe some of the institutional money, be it equity or debt? Because we all know that grant funding, while it's fantastic for the founders and the companies themselves to get things off the ground, is not the most favored, or it doesn't get the brownie points from the VCs when you're fundraising. So
Mm-hmm.
how do you think about it, and how are you seeing this landscape at the moment?
I think this is a bit of a personal choice. To be honest, I think
Mm-hmm.
my opinion is that funding at different stages of a company needs to come from different sources. So what I mean by that is if I have a business idea that has been proven to work, let's say in a different market, and I have essentially somewhat of a blueprint which I can execute on, and if I execute really well, there is a good chance I capture that market that already exists, then I would say that's a very good case for venture funding, even at a very early stage. But for us, that was quite different in the sense that we had this vision of building a data platform in an industry that has no data platforms. And we saw this future being built, which, it was a dream. And to some extent, I guess it's still a dream we're building out, but it's also not something that requires rocket fuel in the beginning. So for us, it was a good option in my experience. Sometimes venture funding for ideas that still need to mature and check out and potentially build a market. Venture funding applies quite a bit of pressure on the founders, which some ideas just need time for the market to grow, for the idea to be sort of digested by the industry. So I think
Mm-hmm.
again, it's personal. From my experience, grant funding is a really good start for projects that are projected to take long.
I think that's a fantastic point, and people barely think about this, or they just forget or overlook this point. So the first thing is you need different kinds of capital at different stages of your company's growth. So true. Not all capital, is created equal. It's so important. And I really, really value the point about, a VC backed business needs to grow at a certain pace, and there's immense pressure on the founders. And especially now when you have to create the market, educate the market, there are different sources of capital that are much more allowing of research and R&D and trying out different things than just being on KPI focused, North Star metric focused and stuff like that. Is there anything
Yeah.
else that you want to add about the overall grant, just to sort of sum it up?
Yeah, maybe one last point that you mentioned, which is in the eyes of a VC, having raised the grant or having gotten a grant might not be, the most beneficial, or at least it's not seen as good
Mm-hmm.
as having raised another venture round. I would say there's a bit of a shift, at least in the perspectives of a lot of founders that I speak to, which is, we're not in the game to raise funding. The real reason for starting a company is to solve a problem, and then solving the problem means you build a business. And sometimes venture funding is absolutely critical to building a specific type of business, but the goal should be to build a business and not to please investors and try to attract funding without necessarily having specific needs for that funding. So I would say maybe this is a bit of a utopian view, but even for us. So we've had a somewhat slow start in the beginning because we had this kind of new market vision, if you like. But as soon as you start having the right kind of traction and the right kind of metrics, the investors come to you anyway. And if you've had grants or not in the past, if it looks like it's a business that's growing sufficiently well and needs, the kind of rocket fuel that uh, venture capitalists have, then I really have no doubt that money would come towards you from those sources as well. So I don't think founders should be too worried about. It's not like a bad thing on your CV. The thing that investors
Hmm.
really care about or should care about is just good metrics and a good business that has high potential of growth.
This almost got a bit philosophical, I should say. And I really like it because that's the point, right? That's the point of starting a startup. You have a pain point, you find a market gap, and you want to address that. But somehow, in the last 15, 20 years, you've sort of forgotten that starting up is about solving a problem, but it's become about who's the next unicorn, who's the decacorn, who's raised the most money. So has there ever been a moment like that in your business, Panos, where you're trying different things are growing slowly, and then suddenly you find the product market fit, or the magic happens, and then there's an exponential growth? Anything like that?
I'm not sure I would say exponential growth quite yet, but we've definitely had somewhat of a small pivot at some point, or a launch of a new product at least that,
Mm-hmm.
for us had much higher growth than what we initially started with. So I haven't explained too much about the product, but essentially a lot of what we do is we collect both open data as well as data from proprietary sources. We augment it and we enrich it. So we essentially create kind of the best database around like information in the construction industry. And then we find ways to disseminate that data so that it's democratized and like easy to use. And the way we started going about this initially is that we said, let's just offer the data for free through a platform that has a nice user interface and that makes it understandable and usable. And then let's try to find ways to monetize on the supply side of the platform. So essentially, the data that we collect is data that comes and relates to building products. So we said we need to find ways to monetize on the building product manufacturers. And while that worked for a while as the platform was growing, we basically at some point had hints, let's say, from some of the users of the platform that they wanted to have the data kind of more in its raw format. So either in an Excel file or through APIs. They had some really interesting ideas of what they wanted to do with it. And for us, that seemed kind of like a really nice idea because what we were really, really good at, especially in the beginning, was maybe not so much building the perfect looking platform because we were quite limited in terms of resources, but we were really excited and good at structuring data and having high quality data that you can filter through and sort and do analytics. So it sort of fit also, our personal characters as a request. So we just said, okay, let's do it. And we launched an API to essentially provide the data to one of our core companies that was a big user on the platform. And essentially that really kicked off a spree of other customers coming towards us asking for API. And the most interesting part about this, besides just, the commercial traction around it, is how many different types of customers come towards you once you have a product that is quite stakeholder and agnostic, right? You're just selling data essentially. So then you could sell data to a building supplier, as well as an architect, as well as a software company. So that's been really, really interesting for me.
What's interesting to me is that there was one significant customer who had a particular request, and you built it for them without expecting anything else to happen, and then that sort of was that watershed moment for you. But when you started building, before putting in the resources into to building an API sort of structure, did you ever think about, oh my God, this is a lot of resource just to build for one customer? Because it's usually, am I then becoming a service company building, for each and every request of the customer?
Mm-hmm.
How did that decision happen?
It's a really good question. It's a challenging one always for early stage startups, I find, because especially when you're a small team, you usually have the ability to move really, really fast. So for us, launching an API was almost no work in the beginning because our platform is API first anyway. So we essentially just released permissions for one of the APIs that we had been using to build our own platform to one of our customers. Of course, there's a bunch of work that comes with that, with documentation eventually, and, like legal work around the data licensing agreements and things. But for us, technically speaking, 2 weeks after they asked us, we said, like, here's an API key, try it out. Let us know if this is what you're looking for. And then once they confirmed, we started doing the work around making it a more publicly facing commercial product. So it's tempting because that often is the case when you're still small, and especially when you're a small team, to create new features. In the case of this specific product, in a way, it was something that we were thinking will come 5 years down the line. We were thinking APIs might be a core part of our business, like down the line when people really get used to using data. I guess we were wrong on that. There was already quite a bit of demand, which hadn't been expressed in very technical terms.
Was there a point where your internal backends and systems are like, oh my God, this is too much traffic on the website. This is crazy. So when did you know that this is it, this is going to work? So is there some KPI that you were tracking? Is it something fell apart, but that's a good thing? How did you know?
Um, I remember one of like a weekend, my CTO sort of told me have this growth of our database that I can't really figure out from what, because we haven't expanded the data, because our database is mostly data that we are collecting and licensing. And we realized it was essentially the tracking of the API calls that was increasing a lot. So that was a very nice surprise. I guess that, even though we only had a few customers at the time that were using the API, they were using it very, very heavily, which for us showed that, they really have a use case for it. It's not like they're buying it to tick an ESG box and pretend that they're doing something. And then I guess as a consequence of that, we said, this seems like a good opportunity to really try to understand how they're using it. So then we set up with two or three of our kind of core API customers monthly calls where we said, we see that you're using it quite a lot. Let's set up this call so that you can tell us what improvements we should be making. And then if you want to share what you're building with it, that would help us also do some product roadmap and planning for the future. And through those calls, I think it started becoming clearer and clearer that they're not just building a product that's going to be used now for the next few months or for the next couple of years. It's really sort of very large companies, tier one companies in the industry, building infrastructure for the next 10, 15 years while this transition to a more climate neutral construction sector is happening. But if the biggest companies in the space who work with the most demanding customers are doing this much work, then this is obviously a big opportunity. The second point, which is a kind of a smaller one, but important in my opinion, is we're quite active on LinkedIn as a company. So we post a lot of our news, but also a lot of the research that we do. So as I said earlier, like a lot of our team is very, very nerdy and very data focused. So we're often kind of excited with new applications of the data or analytics that we do on it. And once we shifted a little bit our communications and our marketing on social media more towards the data side of things, we sort of discovered a whole new community of people within the industry, which are essentially software developers which have an architecture or an engineering background that were extremely excited about having an API solution in the sector. So that also kind of, opened our eyes a little bit to a crowd within the industry that we had already been working in for a couple of years that much better fit our own characters, I guess, but also fit very much, this new product that we had launched.
So I really liked it when you said you discovered a new set of or a persona of customers or a group or community that's closely fit what you're looking for as well. You always discover these people. You're not all the time. You're not inventing or creating them. Very
I guess, sorry
interesting.
to
And
jump in,
also,
but maybe to just say one more thing to that. I think one of the things that has been a very nice understanding for me as an entrepreneur is there's a certain type of skill that I have, but also like our team has. So there's a certain profile, let's say, of skills. And this shift towards this API and more data focused approach, besides having a market that had been sort of uncovered for us, what really happened is that our product shifted closer to what we like doing. And then if you like doing it and you're good at it, then you inevitably have an advantage in the space. So, it's not like we don't have competition, but I think it's quite clear to me, at least, that, there's a special mix of people that are building what we're building that really weirdly almost suits that type of market right now. So I think it's really important to figure out something that, suddenly starts feeling less like work and more like what you would love to be doing, because I think that gives you a bit of an advantage commercially as well.
fantastic. Would you like to sum it up? So how should a founder go about a pivot and finding that this pivot has worked or is working?
That's a difficult question. They say product market fit, you don't you'll just know about it. I think listen to your customer and listen to them like really closely and try to understand what they're looking for.
The last question for the show, Thanos, is what are you excited for future? So it could be about the industry, the built world, or 2050 materials, or your life. What are you looking forward to?
I guess I would say related to not just our industry. Like I think the whole rise of AI and the whole hype that's happening around it is justified, I think, to a very big extent. But I'm also particularly excited about how it opens up the space of using data for good, using data for, to solve problems. I think it opens up who can use data and who can analyze data. From my perspective, as someone who founded a company in the data space as a kind of data platform and data provider, I'm really excited not just about how it can impact us as a business, but just I know because I've seen from customers how impactful data-driven decisions can be. And specifically, I'm very passionate about solving the climate crisis. I really truly think it's a crisis. And I am quite excited, albeit the political environment, about changes that will happen in the space because we're integrating more data. So I do think there's a bit of a data revolution happening in many sectors. And I think it's really a fun topic to be working on.
Well, thank you so much, Phanos. I think this was a power-packed, super impactful conversation. We touched upon a lot of different things, pros and cons of grant funding. How should one think about pivot, and how listening to one or many of your customers can lead to a completely different result. Thank you so much for your time. I really appreciate it. Hopefully, we can meet in London or in Zurich and get a coffee soon.
Definitely, yeah. And thanks again for the invitation. It was really nice.